And another thing, what I always tell members as well, and the issue with retail traders is retail traders won't cut their losses early. They'll hold their losses, but when they go into profit, they cut their profits early. The key to success is that having the right psychology, sticking to your strategy, and also risk reward. Cut your losses early, keep them to a maximum 1%. And then when you're in profit, have the mental strength to hold that trade. Believe in yourself, trust in yourself. But again, things we're going to talk about in the future, the reason that you're probably not able to hold that trade is because you're probably over leveraged. Going back to my story earlier, I was able to hold trades when I first started trading because it's only £1 a pip. So I didn't care about the fluctuations. Every trade you take should be like that. You should be able to have the fluctuations of the trade going up and down and not care, not have emotion, and have the mental strength to not worry about these fluctuations. But what happens a lot is retail traders, they over leverage, or they're too invested with the money they've lost, or they've had scars from blowing accounts before, they're scared to take trades, and they won't let the profits run. But often, if you let the profit run, it will keep going, and you'll make a lot of profit. Just like when you're on a loss and you're holding it, and it keeps going against you, and it won't stop going against you. You can't stop being in drawdown, and then you blow an account. When you're on the right side of the market, hold a profitable trade, just like you would hold your old self would have held a losing trade. We've all been there where we've held losses for days, weeks, maybe even months. But when you're in profit, you won't do the same thing, which is crazy. So next time you're in a winning trade, believe in yourself more, and then let that trade, let the profit run more to make more profit, and let your strategy play out. Because again, the problem isn't the strategy, it's you. Because if that was on a demo account, you'd probably let that trade run much longer because you have no emotional attachment to the profit that you're seeing or the fluctuations. The same goes if it was an amount that you don't really care about and you're not over leveraging, if it's just 1% risk, and you can allow that to run. But again, another example of the strategy isn't the issue, it's you as a trader, it's your psychology. Because when you might be in 10% profit, then it comes back down to 5, you start panicking. We actually had a trade this week, GBP USD, it went down to 4%, went back up to 2%, went down to 5%, went back up to 3%. But it was like, and then eventually hit 8%, we took profit and we got our profit. But we weren't worried about the fluctuations because your confidence in your trading and having the mental strength and psychology to say, no, I know the market's going up and down and being a bit wild, but I believe in my strategy and I'm not going to change